What a bloodbath. Crypto is down, stocks are down, and even the US dollar is bleeding. What is happening? Why is this happening? Today we're going to talk about all of that, as well as what I think is going to happen next and my portfolio. So without further ado, we're going to jump straight into it. And I think you can kind of appreciate what's happening. Just if you look on the right hand side of my screen, you can see pretty much everything is down. Stocks and crypto across the board, everything is red. And to kind of appreciate why this is happening, we first need to look at this chart. This is the US dollar Japanese yen chart. And here you can see back in 2023, right at the start of January, this was trading at 127 US dollars to Japanese yen. That was the rate. This actually went up over the coming year and a half until maybe a couple of weeks ago, up 30%. As a result, it meant if you were an American going to Japan, you were going to have a great time. Everything was super cheap. Unfortunately, if you were a Japanese going to America for a holiday, things were going to be very, very expensive. But why on earth has this happened? Well, one of the reasons is the Bank of Japan had historically very low interest rates. And we know that in the United States, interest rates have been around 5 or 5.5%. And so this created an opportunity or an arbitrage where people in Japan or traders across the world, what they could do is they could borrow the Japanese yen against their assets, sell this, causing the price of the yen to go down, buy US dollars with it, causing the price of the US dollar to go up, and then use that to buy equities, crypto, whatever, commodities, or even property. And this has happened during the entire process whilst this arbitrage has been present, where Japanese rates have been historically low and US dollar rates have been high. We know that because of the interest rates that we see today in America. And if you leverage this up, ultimately you can make a lot more than just the 27% this has gone up quite significantly, especially if you did buy high risk assets, including tech stocks or crypto, you would have made a lot more. And so this has been a trade that has been very, very popular, and some interesting things have happened. First of all, the Bank of Japan increased the interest rates for only the second time since 2007. And this is something that really caused quite a bit of havoc. Firstly, this is because, it caused a bit of pressure on buying the Japanese yen, and these traders kind of had to unwind their position. Why? Because that arbitrage isn't as present anymore, and especially when it comes to leverage or leverage trading, this poses a bit of a risk. You're going to start losing some money. And now that there's buy pressure on the yen, these traders are unwinding their positions, meaning they are going to have to sell their dollars and buy yen. This causes more buy pressure, and it's kind of like a cyclical effect. And that's why we've seen just in a matter of days, a 12% correction for the US dollar against the yen. So the yen's shown some strength here, and this is again caused some problems just because of the unwind. Now, remember that these leverage traders were buying crypto, equities, property, and by having to kind of unwind these positions, they're having to sell all of these assets. That's why we're seeing stocks across the board down, and that's why we're also seeing crypto down. A lot of this has been caused by this carry trade arbitraging the yen. Now, because the interest rates have gone up, of course, in Japan, it does mean that if you're a Japanese company, it's more expensive for you to borrow, it's more expensive to run your business, and that's why the Japanese stock market has also gone down quite a lot. Over the last 5 days, almost 20%. It's the worst 3 days in the Japanese stock market history. Other similar markets, like the Taiwanese market, is down its greatest amount in the last 57 years. So this has caused in general massive chaos in the market. And as you can imagine, if all of this is happening, then Bitcoin is also going to go down. So Bitcoin, just from recent times, just a week ago, was trading at $70,000. As of this morning, it was almost 30% down. Now, it has recovered a little bit. You can see here we've had a little bit of a bounce just in the last couple of hours of around 10%, but we're still down massively, and Bitcoin is now trading at $54,000. Yeah, significantly down. I think it's maybe around 30% down from all-time highs. And if Bitcoin is down that much, then you can imagine that altcoins are down significantly. I mean, we can take a look at some altcoins like Arbitrum. I mean, these kind of alts have been absolutely destroyed. I mean, look, you can see this was trading at $2.40 and is now trading at 40 cents. Absolutely wrecked. And I actually wrote about some of these different alts that are down from their local tops earlier on today. You can see, look, Bitcoin 32%, ETH 45% down from its local top, not even all-time high. And you can go down the list to some of these different alts, and some of these alts, you could argue may have some good fundamentals, but that doesn't matter. Altcoins are altcoins, and they will get wrecked in bearish conditions. And you can see here, every alt is pretty much down. Not all, but every alt that I've got on this list at the moment is down over 50%. Some of them being down 80-70%, which is absolutely unbelievable, and a few even in the 90s. This feels like a bear market, doesn't it? But I don't think it is. Actually, I do think that things are going to get better. And one of the reasons why I think things are going to get better is eventually we will get some rate cuts in the market. And when we do get some rate cuts, I think that causes liquidity to kind of flow back in. And I do think, with the Trump administration potentially coming into power later on, especially towards the end of this year, I do think this will make, not just crypto, but the stocks as well, will generally perform well. We're going to get out of this difficult time period where we're in. Inflation was really high. Now that's been tackled. That's why the interest rates went up. Now interest rates are high. The rumors are we're going to kind of cut that, and that's going to make it, better for businesses, better for people. It's going to be cheaper to borrow. There's going to be more leverage. There's going to be more liquidity, and therefore I think risk on assets are going to perform well. So, I mean, you can look, the damage has been done though on a lot of these assets, especially if you look at something like ETH, which, has just had red candle after red candle after red candle after red candle after literally a week of red candles, going from what looked like a semi-decent position all the way down. And, we're even lower than we were pre-ETH ETF. And, this was a massive surprise for everyone. But yeah, we're the fact that we're trading almost low, in fact, we've completely erased over 6 months, 7-8 months of gains. In fact, earlier on today, we were trading at the same levels that we were trading at the start of December, which is absolutely insane to think about, especially given the fact that December was, 9 months ago. But here we are, and the question is, what can you do about it? Well, I think there are a few things that you can do. I mean, one of the things is not to panic, and that's because when you get in these situations, often you kind of think of the worst case scenario. I think right now it's important to preserve capital, and one of the ways that you can do that is to not try to trade everything back in one go. Don't try to leverage trade everything, 100x leverage trade, thinking, if it just goes back up, 10%, you're going to make it all back. The risk there is exponential, and I wouldn't recommend that to anyone, really. I think it's often better to kind of remain rational, if you can, and try to think about where you think things are going to go in the future. If you think things are going to get a lot worse than here, then perhaps sit in stables for a little bit. But if you think that this is a good opportunity for the future, and you think that, things like the rate cuts, as well as better liquidity and overall macro conditions are going to come, and the fact that we've had this massive reset in the markets means that the markets are going to be doing better in future, then I think maybe it's a good idea to start dollar cost averaging. Ultimately, I can't give you any financial advice, I'm just a random guy on the internet, and nothing that I say is any financial advice whatsoever. But I can tell you what I'm doing, and you've seen time and time again that I have been wrong, but this is exactly what I'm going to do. And so here's my portfolio at the moment. You can see in the last week we're down like 33%, which is massive. But like I said, I'm not going to panic. I'm not going to do anything too drastic, and that's because I'm happy with the altcoins that I have. you guys know that I'm a big fan of ETH. You guys know that I'm a big fan of AI and BitTensor. And you guys know that I'm a big fan of Dinero. Yes, you could argue that some of the alts that I have, especially the ones at the bottom, are not in favor and probably won't catch any sort of narrative. You might be right. And so for them, I may cut positions. But I think for now, I'm fairly happy with how things look. And what I will do is, I think in the coming weeks, try and think of like where I think narrative is going to flow. You may notice that, last week I did buy a different altcoin. I got rid of it. And I think this was just part of capital preservation, really. And so, yeah, I think capital preservation is really important. You can see that I'm down bad on some of these alts. I've made some bad choices here. But this is part of the game. This is, sometimes, sometimes you just do things that you think are right, but unfortunately they're not. And that's why fundamentals don't always matter, you see. We live in an attention economy and things need attention. Now, unfortunately, there's been no alt that's really outperformed at the moment. I think no matter what alt I purchased, I would be down bad. That's just the way that things are at the moment. I do think like eventually, especially as we go towards the end of the year, I don't know, maybe the rest of August and September might not be so good. But I do think as we go towards the end of the year, I am expecting things to get better. And so if I do think that is going to be the case, then I'm happy with this portfolio and I'm going to keep, adding wherever I can. I'm going to keep farming with my assets. I'm going to keep trying to increase the cash flow of these different assets, which are currently pretty cash flow positive. I'm going to keep farming for airdrops. I'm going to keep trying to build this portfolio. I'm pretty confident that we will get this portfolio to $100,000 eventually. But I do think it will take some time. I don't think it's happening anytime soon, especially in this market right now. So we'll have to wait and see. Either way, this is kind of what we hold at the moment. I am ETH heavy at the moment. I believe it's 40% of the portfolio. Probably when times are better, this can be a little bit more risk on. But I think for now, clearly, that's probably not the best idea for me at the moment. And I could be wrong, but for me at the moment, I think this is how I'm going to play things out for now. So yeah, that's pretty much all we're going to cover today. Today, I just really wanted to explain kind of what's been going on in the market and why all of this action has happened. Let me know what your thoughts are. Let me know what you think I should be doing as well. Let me know what you're doing. I'd love to know. And I'll give you a reply back as well. Smash the like button, subscribe to the channel, and we'll be back with plenty more content in the not so distant future.